Traders, today we are discussing a tool which is one of the most important tools we use in our day-to-day activities in trading, and that is what I call the Fibonacci retracement. The Fibonacci retracement. Now, there's something I need you to understand about Fib. If you don't have a very good understanding about market structure, please try to go and watch our videos about market structures somewhere around the corner. Go and watch it, because irrespective of how you understand fibs, if you are still struggling with direction of the market, you may not likely understand how this thing really works. You'll not be able to connect the dots together. So I will always advise that please go and watch our video on market structure. Having said that, trader, the first rule in trading states that buy low and sell high. Because if you don't really understand how to buy at a very cheaper price, and you sell at a very higher price, you'll be buying, you want to take all the opportunities you are seeing in the market. I want us to see this particular scenario. Imagine you are trying to buy a particular asset, and that asset is for $100,000, and you have three sellers to you. You have someone you just met randomly online who said he's going to give you a 20% discount. You have another person who said, okay, he's going to give you a 40% discount. And you have another person who's ready to give you a sum of 70% discount. The three assets are of good standard quality. I'm very sure as a business person, you'll be going for the one that's giving you that 70% discount, because you'll be buying it for $30,000 of the same quality standard. So now, explaining that, we are also taking this to trading, because when you buy at a very cheaper price, definitely you are taking your profit when the price has gone up, depending on the direction you are going. So I want us to look at what we have on the screen now, right? And I talk about you understanding market structures very well. Now, if you check what you have here, you have this market going. We have a low that gives us this particular high. You have another low that gives us this particular high. So definitely this market is an uptrend. Now, the market has taken out this high by giving a new higher high. I will now have a new higher low. As a trader, what comes to your mind is, at which zone do you really want to join the market? So now we are expecting market to do what? To give us a little pullback to any particular level to go and create a new higher high. And I can tell you that as a trader, when you understand how to use these particular tools, it makes things very easy for you. Now, the first thing you need to understand about these tools is the direction. Once direction, your structure is clear, the next thing is you want to pick your recent high and your recent low. For the sake of this particular chart now, this is my recent low, who has given us this particular high. So you see, I already marked it. My swing low, my swing high. What I'm expecting the markets to do is the market to give me this particular correction back to the downside to go and create a new higher high. Now, if the market is doing that, how did I take advantage of this? Now, there's something I need you to understand about this particular concept. You have a zero here, which is your starting point of retracement. You have to understand that, okay, this guy will start retracing from this particular level. And you have a 50% and you have a 100%. So that means this market pull back to this particular price. This market has done a 100% retracement. Then we expect a bullish movement to the upside. One of my best things about this particular tool is I focus more on three cardinal points, which is the starting point, the 50% of retracement, and the 100%. There's extension, but that'll be a topic for another day. There's extension, yeah. So now, my target is I want to buy below 50%, and that area is what we call the discount price. So anything below 50%, it is called discount price. And anything above 50%, it is called premium price. So that means if you're in a downtrend, you want to sell at premium price. And if you're in uptrend, you want to buy at discount price. All right. So now this is just an example for an uptrend. So currently now I'm looking at buying at discount, then selling at premium if I'm in a downtrend. Now, if you check what you have on the charts, I only mark out 50%. The starting point is 0 and the ending point. As long as this market will continue in an uptrend, I expect this market to bounce back from this particular price to go and create a new higher high. Now, having marked out that major levels, my expectation is I want to buy from discount price. If the market starts retracing back to the downside, right, I want to buy at a very cheaper price. Now, don't forget that since we have 50 here, that means below 50 we are going to be having 60, 70, 80, 90, and then you have 100. This is part of this I call my golden price. I like to buy around 70%. That is my golden price. I like to call it my golden price because 70% to me most time, if I see a very good OB at that particular price, then definitely I'll be focusing on it. So looking at Fibonacci retracement is just a tool that we use to determine the level, the zones at which we really want to buy for or we want to sell for. And having explained this to us, I want us to go into the chart so that you can see how we now apply this on our chart, which is our day-to-day trading. So traders, let's see what we have here. Currently now I have a trade I'm expecting. I want to join on the USDC shelf, and one of the reasons why I want to join this trend is because the market is a downtrend. Based on what you are seeing on the screen, this market has been a downtrend, and currently now I have this particular high that gave us this particular low. And as a trader, the first thing that comes to my mind is to mark out my swing high, which is this particular level here. Is my swing high here. This is my swing high. Let me take out this guy. So I have my swing high and I have my swing low. So the next thing for me is to drag my fibs from here to the upside. Now, as you can see what you are looking at here, the market has given us this correction back to this end here. So definitely in a downtrend, based on our initial discussion, the target is to do what? To sell from a premium price. So for me now, the market is sitting at a premium price. So definitely I'm selling back to the downside. So the simple thing is understanding the directions of the market. So you're understanding, once you understand your direction, then you want to mark out your swing high, you want to mark out your swing low, then you are taking that range. Even though this market will continue going up, at least the market will push back to somewhere here before getting to anywhere here. And those areas are the zone at which I would like to join the market from. Okay, let's check out that chart for another good example. Okay, beautiful. Now let's look at what we have here. This is a very good example as well. All right, so if you check what we have here, this market has been giving us a downtrend vibe, which is low. The credit high has given us this low. Now the first thing I need to do was to mark out my swing high, which is this top here. This is my swing high here, and I mark out my swing low, which is my swing low here. So having seen these two areas, if you see what the market has been doing, the market is currently pulling back to where? My premium price. The market is pulling back to my premium price. The market is pulling back to my premium price. Now, when market pull back to your premium price, there's other confluences or conditions or there's other rules we are adding to this for us to make a decision. But you have to understand that the first thing you are doing after you identify your direction is to pick your premium and your discount price by using your Fibonacci retracement. So here, I'm currently waiting for market reaction. If you see what I have, I already marked out this particular level because I have a whole bid there on the 4 hours time frame, which I'll be expecting market reaction from. And outside that, I will not be expecting the last level of retracement, which is my 100% level of retracement. All right, let's check another example. Now, let's look at this particular movement here. This is on a Euro GBP, whereby I have a high and a low. I have a swing high here. I also have a swing low here. And the first thing that comes to my mind is to use my fibs. So now I'm expecting more of pull up to the upside, so that let the market pull back to a premium price. Never forget a premium price, a premium price, a premium price. Let the market pull back to a premium price. And at that premium price, I already have a very good OB, which I'll be taking myself from. Now let's check something on this still another good one. So I have a swing low sitting down here, and I have a swing high. So a swing low, swing high. If you see what you are having here, this is the 50% of this particular retracement. So looking at this my 50% here, I'm expecting this market to pull back here. So never forget that here I have two levels. So I have one at maybe around 55% of that retracement, and I have one at around maybe 80 or 75. So the idea is, if I see market reaction at this particular junction, I can take a shot because it's already above 50% of my retracement. So by the time we continue in this series, you get to understand how you had other factors for you to make your decision. But the first thing you need to understand is, in the market, you want to buy at a very cheaper price. That means you are buying low and you are selling high, right? Now, the next thing, you want to use your fibs to determine the zones at which you will be focusing on for you to take your decision in the market. We have a very good one on gold. Now, if you see what we have looking at this particular movement, we have a swing low here, and we have a swing high here, a swing high here. So if you are making use of your range, you are using from this level to this particular high. So that means this correction started from zero and the market has pushed back to this level. If you see what is happening at this, I think this current price we have maybe like 80. You understand that now, like 80% of retracement. So gold has done 80% of its retracement. Currently now, we are having another push up. So there's high tendency that gold will be going up to go and create a new higher high based on what the chart is telling us. So something I need you to understand as a trader is understanding how the market really works, understanding how the market moves. Once you understand the movement of the market, then it's not easy for you to take advantage of the market. And something I always advise as a trader is, don't just use these tools based on how I've showed you. You are expected to go to your chart, study the charts, and I said make sure you work on market structure. So you work on your market structure, you work on your chart, understanding the market behavior, then also back test this particular concept for you to have enough confidence for you to take the direction. I remember my humble self, guys. Please follow up with this channel. If you've not subscribed, kindly subscribe so that I can have access to more of this content. Thank you. Peace.